South Korea's ruling party and the government agreed today to revise several statutes as part of efforts to create a fair economy, one of the Moon administration's key economic policies. Our Kim Hyesung with more.
The government will ease the so-called 5% disclosure rule to help increase shareholder activism in the country. The 5% rule mandates that an investor who owns 5% or more of the shares in a listed firm needs to provide a detailed report to the country's financial watchdog when selling or buying more than 1% of the stocks within 5 days. Critics have said the measure limits shareholders' rights as it exposed their investment strategies. The revision would enable an extension of the reporting period and filing of simpler reports for investors whose purpose of buying or selling of stocks is not intended to exercise influence over management decisions. This is just one of the 23 legislative changes the Korean government and the ruling party announced Thursday to help improve corporate governance and address unfair market practices.
We will revise the law so corporate board of directors and shareholders meetings are run competitively. We will strengthen rules related to corporate disclosure and circular shareholding structures.
A so-called 10% rule will also be eased. The rule mandates that an investor who owns more than 10% of a listed company needs to return the profit gained from short-term trading to the company. Regulators will provide exemptions to this rule for the National Pension Fund if it comes up with guidelines to prevent the misuse of confidential information or insider trading. In addition, the employment period of external board members will be cut from a maximum 9 years to 6 years to enhance independence. Other revisions include consumer rights protection in e-commerce and finance and stronger regulations for holding companies. The ruling Democratic Party said it'll work closely with the government to pass the revisions by the second quarter of 2020. Kim Hyesung, Arirang News.